G'day folks, Jim here from FX Charts. It's Tuesday the 29th of April. Thanks for tuning in. It's been a pretty choppy session, ending up going nowhere really. I think the market's waiting for the heavy data load that comes up over the next couple of days. The highlight today really was in sterling, I think, which made a new 4.5-year high. That was basically on the back of some M&A talk. Cable's been unable to maintain those highs at the moment. It's back where it was pretty much, as are most things. So we'll go and have a look at the charts. And the euro, starting off with the euro here on a 4-hour chart, and it kind of did what we expected, which was to remain within these converging resistance and support lines. It did have a brief spike up to 138 3/4. Right on the European Open, and it hasn't really maintained those gains. It's back at 138.5 this morning. The indicators are reasonably flat, so for the time being I don't expect it too much, but we've got some consumer confidence data coming out later on. The real interest, the German CPI is also coming out, which may be a bit of a hint as to what will happen tomorrow with the EU CPI. The market's beginning to suspect that that might be a bit higher than expected, which would delay any possible easing from the ECB. And Mario Draghi was speaking today and possibly hinting at that. So it could be that the euro does, if the numbers are correct, and the euro should stay supported, and we might see a move back above 138.70. To take out this high up here around 139.05, and above, if we do go above there, then we could be headed back up to this 139.66 high. I don't really expect that today. I really think the market's probably waiting for tomorrow's major data releases. We've got the US GDP, as I say, the EU CPI, and also the FOMC meetings tomorrow. So I wouldn't be surprised to see more action really around current levels. Support on the downside, today's low was 138.15. There's going to be bids down around 138, and below that it's 137.80. There'll be some stops underneath there, and that could take us back down towards this low. This is around 137.60. I wouldn't imagine we're going much below there today. I don't think we're really going to see it below 138, to be honest. And it could just be another choppy day, but if anything, the movement looks as though it could be slightly higher for the euro. The dailies, though, are completely flat, and I wouldn't be getting too carried away in either direction. As I've said before, as I said yesterday in yesterday's video, this rising wedge is beginning to look a bit interesting. There's good resistance up here at 140. That's the top of the rising wedge. And I tend to be a seller up there. The ECB wouldn't like the euro much above 140. So I'd be a seller into strength. If we do head above 140 though, as I've said before, be a bit careful, because there's not an awful lot of resistance until this high up here, which comes in around 142.40. So that's a long way off at the moment. And the weeklies, likewise, they're pretty flat as well. So they're not off. Really, it's a neutral stance we have to take in the euro for the time being. Dollar yen, well, pretty much likewise. It's a Japanese holiday today, and then we've got we've got Golden Week next week, so there's not going to be an awful lot of action, I don't think, except for the fact if the BOJ do spring a surprise at tomorrow's meeting. As I say, today's a holiday, but there's nothing expected from the BOJ, and I think for the time being that this low here is about just under 102. This high here, 102.73, and it wouldn't surprise me today to see the dollar just trade within those parameters once again. We've been trading sideways. This is an hourly chart. We've been trading sideways really in this 102, 103 band for a couple of days now, and or more than a couple of days really. And the 200-hour moving average is around this 102.40 level, and I think we could expect that to act as a bit of a pivot. So I wouldn't be too bothered about the yen today. Sterling, as I say, that's where the interest lay. It did make, this is a new 4.5-year high here, which is a bit hard to see on the dailies because it only just took out that 168.40, got up to 168.57. It's back at 168.10 at the moment. If we go back and have a look at the hourly chart, perhaps, yeah, that This is the high that it got up to, 168.57. The 4 hourlies show it as well. But we've come back and we're sitting on this rising trend support here. Now, if we break down through 168, down around 167, 70, 80, maybe 167, the figure, this is about 167.0510 at the moment, this rising support. That may attract. Now, we've got the UK GDP today. And I think that's expected to be about 0.9 month on month after the previous month 0.7, I think it was. So if 0.9 actually does come out, well, we're probably going to see another test of the top side, and above 168.57 would go back to this multi-year high here, 168.70, which if we go back and have a look at the weeklies, takes us right the way back here to this high here, November 09. So that's at 168.75, and above there, there was with a previous high above that is this second red line up here. It's about 170.40, and that's August 2009. So a strong GDP number could see sterling continue higher. On the nearer home, if the number fails to support cable, then we could see a breakdown below, so 167.80, 167.70, and potentially head all the way back down here to 167. I don't really think that's likely today. There will be stops below 167.50, but the 4 hourlies are flat. The dailies actually look as though they might be just trying to turn over, so I suspect we're probably in for some more choppy trade. I'm a bit dubious that we are going to take out this 168.75 for the next day or so, unless the euro heads markedly higher after tomorrow's CPI number. But I think really we'll probably wait till later in the week, the FOMC, and of course the non-farm payrolls on Friday, and I think that'll probably give us the real direction for the week. So for the time being, use 168, I think, is a bit of a pivot, and for the time being, though, as long as it holds 167.70, I think I'd still probably be a buyer on dips below that 167.70. Though I do think we're probably headed back towards 167, the figure. Dollar Swiss, that took out stops below 88 yesterday, got down to this rising trend support, got down to about 87.70, I think it was. Bounced back after the better than expected US pending home sales supported the dollar. It's in no man's land really, so I wouldn't get too involved. The dailies are pretty flat, and the weeklies likewise. But for the time being, wait for the data later on in the day. And I kind of like buying the dollar still, but if we do go under this sort of 87.5 level, then I think I'll be out of it, because I think we're probably then going back down towards here to have a look at this bottom down around 87, the figure. But while this holds, we could see a move back up to sort of 80, this 88.70 area. So maybe, like as with the euro, we're just going to continue trading this the converging range. The Aussie, well, that saw a spike high up to 93.15 in early Europe last night. Failed at the 200-hour moving average, and it was one-way traffic ever since, really. It's attempted a bit of a bounce since coming up off its low of 92.43. I don't think should expect a great deal today. There's no data out, and this channel that we're currently in with parameters around about 92.25 and 93.30, 93.35. That looks like to me to cover it again today. As I say, we've got there's no data. The 4-hour charts are potentially showing a little bit of bullish divergence. So we might see it. We might once more get a bit of a squeeze up. If we were to break here, then 92 the figure, and this the red support line, as I said yesterday, 91.85. That's the neckline of the head and shoulders that we were watching. Let me just close that up a bit. That we were previously watching, the shoulder head shoulder. So 91.85 should act as decent support. If we go above 93.30, then this level up here, 93.80, 93.75, that should cover it on the day, but we're not going to go there today. And I think the Aussie market's really looking forward now towards the FOMC and probably more importantly the Chinese manufacturing PMI on Thursday, I think it is. The Kiwi, we've just had the trade data out. That didn't really have much of an effect. It came in reasonably close to expectations. But the Kiwi, having like the Aussie, got up to the 200-hour moving average yesterday, had a bit of a steep slide later in the session, and it's come back to, let's have a look at the 4-hour chart, test the neckline here of what might be an ugly head and shoulders. It's not really, but we've got quite a big shoulder here, and that's not really much of a shoulder there. But if it does go through 95.30, then I expect we're going to see a pretty swift run, I think, towards 95, and then possibly lower down to, sorry, I should say 85, and then possibly down towards sort of 80, 84, 85, which is this FIBO support here. On the top side, there's the descending trend to resistance is at 86, the figure. I don't really expect to see it above there today, and I'd be surprised really if it got much above this 85 3/4, 85.70. We'd probably see much more better on the hourly charts. This level here, 85.87 was the high today. I don't really think we're going back up there, although the hourly charts look as though they are trying to push the Kiwi a little bit higher, but really 85.5 to 85.70. I'd be a seller there, I think, for the 4-hour charts, which are still extending a little bit lower, and I kind of think we will break 85.30 and probably have a test of 85 at some stage today, possibly down to this FIBO at 84, 80, 85. So that's about it, really. As I say, there's a bit of data out later on today. We've got the German CPI ahead of tomorrow's more important EU CPI. We got consumer confidence out of the EU and the US today, but the more important data, I think, is probably tomorrow. And as I say, it's a Japanese holiday today, so I don't expect too much in the end. So that's about it. All up, it looks to be a bit choppy to me, and it's a fairly neutral bias expected, or I think probably all round. So that's about it for today. Have a good one, and we'll talk to you tomorrow. Cheers.